Freedom Financial Solutions, FFS's Q&A. This is being recorded because we get a lot of requests for people who aren't able to join us at the time, who want to sort of hear what questions are asked and what sort of answers are given, or more questions are raised. Today is the 14th of May 2025, lunchtime 12:30, just for the recording.
So they don't have an agency in Singleton?
Sorry, welcome everybody. I might just
in Singleton on Friday.
yourself. Sorry, I'll just mute you So how this works is there is, sorry, I'm just going to mute everybody because there's quite a bit of background noise to start with, but when you want to ask a question, feel free to just unmute yourself. So how this works is there's no formal presentation. We don't have anything in particular that we want to say other than hello and thank you for jumping on. So whoever has a question, you just put your hands up, either in the virtually, like there's a button that says raise hands, or you can just unmute yourself and start speaking. You can ask them in the chat if you can't speak, and we can do that. But I do these quite a bit, and sometimes it splits my attention and other people's attentions if you've got things going on in the chat and being spoken about. So Kat has said, just curious when the recordings will be uploaded, as there hasn't been a Q&A uploaded since February that you could see. Thank you for your thanks. I'm just going to share my screen and have a quick look here to see. I am personally the one that uploads them. So sometimes it does take me a little while. Here's our YouTube channel. If you go to playlists and you go down to group Q&As with Cass and MJ, view full playlist, the last one was indeed in February. So that must have been the last one we did. We've done other sorts of Q&As, not this particular version. February, where are we? May. Then maybe there another one. Anyway, I will check. Thank you for raising that. If there was one. Oh, no, Cass, there was one. We did have one, but nobody turned up. So we didn't record. So that's what that is. February, March, April. We've had a property one. There was a property one, I think that was in March, sorry. Let me just have a look here. So there was a property investment one. That was April. So there mustn't have been one in March. There was one in April, and there was one that nobody turned up to. But we have done other Q&As, but not like this. So we've got lots of people on today. Cass, do you want to say any welcome words?
No, it's just good to see we've got a few people on today, and for those that have been wondering, yes, I am slowly getting myself back on board after a 6-month hiatus for health reasons. So, yeah, so it feels good to be back and actually contributing to society again instead of just sooking. Anyway, so I'm back, so I look forward to some questions.
So does anybody have any burning questions that you would like to ask? JB, you've got your hand up. Just unmute yourself and ask away.
He hasn't unmuted.
Find the unmute button.
Just found. Sorry, bit slow today.
That's okay.
Getting a little bit of feedback, which is confusing, but I'll try and ask a question.
You have JB. You have 2 logins. You've logged in twice, and that's why you would be getting feedback.
Okay.
I can hang on.
Pick out one of them.
Yeah, I can get rid of one of them for you. I can see which one you're speaking on.
Thanks.
And I will remove the other one from the meeting. There you go.
Oh, thanks. That's better. Okay, so my question is, we're looking at transferring some of the precious metal that was purchased outside super prior to us having the SMSF set up into super. And the little detail that I didn't realise was it's going to attract capital gains tax. So just wondering around strategies to try to minimise that. And this is my thinking of how it works, but see what you have to say. So if we were to sell the private metal, the money goes into the Macquarie account, and that deposit, perhaps we could show that as a concessional contribution, which means in the super account, we pay 15% unless we go into pension phase, which would be 0%. And on the same day, potentially buy the precious metal in the super. And then when we do the personal return, claim a deduction. Would that be the best way to try and minimise tax? Or
yeah, absolutely. That is how it is done. But just add a couple of other things to this. How old are you?
so my husband's 67, so he would be able to do the pension bit.
Yeah, and how old are you?
I'm 58.
58, okay. Yeah, so yes, you can definitely do that. You put some money into the super fund, claim that as a concessional contribution. That will offset your capital gain. There is also still, is the roll forward provision still available this year, Mary Jane? The 5-year roll forward? I know it was, they had a deadline on it. There was one provision, I'm just going to see if I can quickly find out, but there was also one provision where you can have a look at your concessional contributions for the previous 5 years. And if you haven't maxed them out every year, you can actually roll forward that amount and say, for example, put in 100,000 this year and claim as a concessional contribution. And that, you can potentially then get rid of all of your capital gain. So it's probably fairly important to make sure you get the contributions right and you don't breach anything. So that might be something worth you paying for just a private consult to work out those figures, because as tax agents, we can have a look on the system and see whether you do have any catch-up contributions you can utilise, and we can work out, I can work out roughly for you what the gain on the metal will be, so therefore what you need to put in to get rid of that gain.
Okay.
Yeah.
Thank you.
Definitely doable. Getting rid of capital gains by putting money into super is fantastic. And the reason I asked you your age is that, at your age, it doesn't really matter to put lots of money in, because your husband can already take it straight back out.
Yes.
And you're only 2 years off being able to take it straight back out. So you may as well get rid of that capital gain and get the money into super.
And JB, you are one of our clients at the moment, I'm going to assume?
Yes.
Yeah, so what you would do is just book in a time with Peter, because this is something that our clients regularly mention that they're going to do a contribution, and Peter, as part of your package, includes a free consult to do exactly what Cass has described. So I always say, before you do any contributions, make sure you book in an appointment with Peter, and she'll go through exactly what Cass mentioned. Make sure what the best way to maximise your tax advantages. Now, just on our website, you know how to book in with us, do you?
Yes, thank you.
Just go to, where's our website? Not that website, that's a different website. There, just book appointment on that little blue thing, and you can book in an SMSF tax consult for current clients.
Okay, great. Thank you.
And I just checked, and that catch-up provision is still available. Doesn't look like it's going to expire. They haven't retracted it yet. So yeah, it's an absolutely fantastic way to get rid of capital gains. You might not have a huge one on the metals, but for anyone who's selling a property, investment property, and have a big capital gain, it's a really good provision to try and minimise that gain.
Thank you.
Thanks, JB. Anybody else got a question? Kat, I know this, hang on. In the questions, I know this is available in the USA now, but is borrowing against Bitcoin available in Australia?
Not that I'm aware.
And certainly not through the SMSF, but yeah. Anybody else?
I have a question. Are you able to hear me? I'm not sure if I got my speaker on.
Yep.
Yes,
Marianne.
Okay. Sorry if it's just been covered. I've only just joined the meeting, but I'm going back to the being taxed on a unrealised capital gain, which has happened to me within my self-managed super fund last financial year, and I'm just querying that, because I thought that it was over a $3 million threshold, but I certainly don't have that much.
Yeah, no. Who is your SMSF Who's your SMSF accountant?
Well, it was Peter, but then the last correspondence I've had is with Mark. Is it Mark Berger?
Yeah, Mark's just one of the admin assistants. So your accountant
Okay.
is Peter or one of the
Peter.
accountants.
Okay.
No, you don't get taxed on unrealised capital gains.
Okay. So that happened, and I had to pay. Now I'm paying. This is my understanding of it. I could be wrong. I'm paying like pay as you go now to cover that.
Yeah, no, you don't. You definitely don't get taxed on unrealised capital gains. So there might be a miscommunication there about what the tax is for.
The
Okay.
pay as you go is come across all our clients. The first year, so you would have set up 2 years ago, is that right?
Yes, I think what we're in now will be only the second financial year return. Yeah.
The ATO basically says, oh, look, we see you've paid this amount last year. We're going to calculate what we expect you'll pay this year, and we will assist you by making it you pay in instalments going forward. That's my understanding of the pay as you go notices. If you look at it positively, so much as we can look at tax positively, it means that you won't have a big bill at the end. But in terms of the capital gains, unrealised capital gains, that shouldn't be connected to that, but definitely talk to Peter.
Okay. Yeah, I even got a letter from the tax office saying what they had deemed my property to be worth now.
Very interesting.
Yes.
Interesting. Yeah, I'll be happy to look at that myself as well and talk to Peter about that.
Okay.
If you can send that letter through to me.
Yes, I'll try and find it. I've been a bit slack. It's a few months back. I'll scroll through my emails and try and find that one.
Because it's something that it's just not in law yet. So
No, it could be a scam.
Could be a scam.
Yeah. Okay. I'll try and find all that and send it through. Thank you.
Yeah. Okay. Excellent.
You send that letter through to Peter or Mark?
I can't remember now. I think I did query it with Mark at the time, but the issue still, to me, it's still unresolved.
Okay, well, I'm just going to have a quick look in our systems here while your other questions are being asked to see if I can find anything that looks like that.
Yeah.
Sure. Thank you.
Excellent. Kat has got her hand up.
Yep, I'll go. Thanks, guys. I had I really enjoyed the SMSF Q&A you guys had about a week ago with Grant, I think it was. Yeah, it was great. And I looked at it again, listened to it again since, and just had a few questions come out of that. There's obviously a lot of information. Do I need an investment strategy is one of the questions. So I think I've got an SMSF set up with you guys under the not under the individual, so under the company structure. And yeah, is that something that?
Yes, every SMSF needs an investment strategy, and the accounting team will be getting on to helping you with that. They can't do it for you, but my understanding is what they do these days is they send you out a template with some pretty simple instructions for you to fill it in yourself. So it's not.
They?
Sorry, what was that?
Who's they? You said they send you
the accounting team at FFS. They will send you a template. So you don't have to worry about it right now. They will get onto it and make sure that you have got one. You need one before it goes to audit at the end of the year. So they you've got one.
Okay, so I was going to say that'll need to be done. I only started the SMSF in July this year, so this will be the first.
They just haven't got around to it yet, but as part of the general procedures, they will do that.
Gotcha. Okay. And then the other question, because I wasn't sure, some of the times when Grant was talking, I wasn't sure if he was talking about whether you're in pension phase or not. And he mentioned something about being able to put in a tax deductible contribution and then potentially a year or two later being able to use that for a first home deposit. It's like take that contribution out again. He said something like that.
Yeah, there are definitely still the first home super saver schemes.
Yeah.
Very complex and quite difficult to navigate. I have not yet, in my experience, had one client actually utilise that provision.
Yeah, okay.
But if it is something that you are interested in, that would be something we could do on a one-on-one consult, or eligibility for it, and see how it's going to work.
Yeah, and I wonder whether all this first home deposit, is it all still kind of has to be a new dwelling and all that kind of stuff? Is that all? Does that still come into it?
I don't know the provisions exactly myself, but that's normally what they do. It's all a bit of a con, because it's really just seen these things before, and really it's just bolstering the building industry to keep new homes going. And then what you find is, we've had things like this before, where there was, like, for example, there was a $25,000 boost for a new home, and then all the builders did was go, okay, I'm increasing my prices by 25,000. And the builders got all the money, and we were all in the same position. So that's, you do have to question and wonder some of these provisions, what they're really designed for.
Yeah, and it's really frustrating as a first, or someone who's hoping to buy a home within the next few years.
Yeah.
I'm not going to be buying some new home in an estate, I can tell you that. And so as far as I'm concerned, nothing benefits me. There's nothing.
And there was another provision, I don't think it's got through, or whether it's still on the drawing board or not, but there was one provision where the government was going to match your deposit or something and own half of your house. That one got through or not? But as soon as I saw that, I went, oh yeah, New World Order, here we come. Government owning half our house. Yeah, well, it sounds like a really good idea, doesn't it? No thanks.
Are they going to pay half my rates too?
Yeah, exactly. And then when they decide that they want the other half, they're already halfway through the door. It's like, yeah, no.
Yeah, okay. All right, thank you.
Marianne, look, I haven't been able to find what you were talking about quickly. So if the best is if you can go through your emails and find it and send it through to Cass. Her email address is in the chat there, Cass, CASS at freedomffs.com.au. Email's also on the website. And if you can't find it, then email me and I'll pass it through.
Okay, thank you for that.
Yeah, there definitely have been some scammy emails and things going around. So, but don't know if that's what happened in your case. But
I will have a look. I may have even printed it out. I'm pretty good like that, so I'll have a look in the actual filing cabinet shortly.
Great. Tricia, just unmute yourself.
There we go. Sorry. Hi, guys. I also listened to Grant the other night, and there was a lot of information there, and I've started to re-listen again. I'm in my SMSF is not yet 12 months old, and I haven't done much with it at all, actually. I'm also 60, and so I could access it when I was 59, and in the industry fund, I was doing that. So this year, since moving to the SMSF, I haven't really been accessing regular payments, and I know that there's a minimum amount that I have to do. Should I do that as a bulk, like, this week, next week, or, before June 30? And then the second part of that is not just the minimum amount, but, I could take a larger amount and then on the 2nd of July, contribute some back. I guess kind of what I'm saying is I'm the only one in my super account, and I have more resources and assets sitting outside the super than I do have inside the super. And I'm really trying to get my head around how to strategize with this, because I don't know if I should be booking an in-depth appointment with someone. I used to have, when it was with an industry super and things were set up, I had a financial advisor there, and now I'm on my own again. And I'm like going, So trying to glean information from everywhere and really not knowing the best way to tackle it. So do you have advice just on that?
Yeah. So firstly, Tricia, I presume your SMSF is with us?
Correct.
Excellent. And sorry, I missed the very first part. How old did you say you were?
I'm 60.
Okay, can't believe it. You look fantastic.
Oh, thanks.
Yeah, that's why I double question. It's like, really? Okay. And I talked to someone earlier.
I'm 61. So
Yeah, 60 is the new golden age because it lets you get your money out of super.
Yeah.
And so the good thing to know is you are not on your own. And as Mary Jane said earlier, you can just book an appointment with whichever accountant is looking after you. If you don't know who that is, book it with Peter.
I have actually booked one with Peter. I had it for yesterday and I had terrible internet and I couldn't connect. So I've rescheduled that.
I'll just answer the questions generally now, just for the benefit of everybody on the recording anyway, but do double check the finer details with Peter because she can look at your fund and the exact. But yes, you should be taking the minimum amount out before 30th of June.
Okay.
So Peter will tell you what that amount is, and for other people, it's on the website. So basically, on the ATO website, you can always look up the minimum pension amount. It just goes by your age and a percentage, and then that percentage is how much you've got in, depending how much you've got in super, you take that percentage. So the reason people do this is to be in pension mode in an SMSF is very, very good because you've got zero tax on all your earnings in the super fund. So we do like people to be in pension mode once they turn 60 and they've retired. To be in pension mode, we just basically tick a box on the back of the computer, but you have to withdraw the minimum every single year. So some clients would do that by setting up a minimum amount every week or fortnight or every month. Other clients who don't need the money, like Tricia, you've just indicated, will just wait till May and June and just take one lump sum withdrawal. You know, it might be something like $6,000 you have to take it out and then put it straight back in.
Right.
May sound really weird, but that's absolutely fine to do, and that's what a lot of clients do.
And could you also take out 40,000 and then on the 2nd of July put back 36,000? And would that 36 be part of your next year's, you know, that contribution, which I think is 120,000 or something?
Yes, and you could take out the 40,000. You could even put 40,000 back in. When you take out that pension, you don't have to keep it out. You can put it straight back in, which is ridiculous, but you can. And yeah, there are a couple of reasons you would want to do that. And that is firstly, if, say, for example, we're talking before about capital gains, if you've got a big capital gain and you want to put some money in to claim a tax deduction, but you haven't got the money, so take the money out and then put it back in again. There's another more complicated reason for doing it, and this is where Peter would guide you. But just for general information, in a super fund, there's two different components. One is taxable, one is non-taxable. Doesn't really make any difference to you at all, but it does make a big difference to your beneficiaries when you pass on. And this is a strategy that we, as accountants, we do work with from time to time, is that we'll get people to take money out of their taxable component and put it straight back in, like even up to the 100 and whatever is now 130,000 a year limit, take 130,000 out and put 130,000 back in every single year until we've got rid of your taxable component.
Right.
And this is really important for your beneficiaries. So, for example, my mother has got quite a lot in super, and if that money, if it comes out to us beneficiaries who are all adults in the taxable component, we can pay, I can't remember exactly, it's at least 20%, maybe more in tax. But if it's in the non-taxable component, it's all tax-free. So what, with my mother, because she's been a client of mine for many, many years, every single year we did that. It's called a redraw and contribution strategy. So we did that with her. So now that when she passes, everything she leaves us kids is completely tax-free.
Right. Yeah.
And that is the sort of thing, and that's great, all the clients that are with FFS, because you talk to your accountant in FFS, Peter or Nanette, and they can talk you through those sort of strategies, and it's all part of your annual fee to have those appointments and work out those strategies.
Thank you. Thank you.
On your other question about you've got assets outside the super fund and you're not sure what to do with, that's sort of useful to have a broader estate planning, succession planning discussion to work out the most, number one, tax effective and best strategy for you to pass it on to the people that you would actually like to receive it in, you know, if and when the time comes in 150 years. So Grant is our sort of senior strategist, but Cass is now back on board after 6 months of leaving me alone. So she's also got a little appointments on our website. You could book in a session with her to get an initial steer on what it is that you're looking at. On our YouTube channel as well, and I'll just share it again. We had a couple of, so if you go to the playlists here and you look at estate planning and wills protect your legacy, there are 2 recordings that Grant did with us, with clients. And you can start by having a look there. If you don't remember where that is, you can also just go to our website and come on, what's our website? It's not happening. What's going on? There we go. On the website at the top, we have an event banner here. And you can see this is all our events. Down here, there's 2 things that we just want to highlight to clients. And one is the Protect Your Legacy Estate Planning and Wills Q&A. That takes you through to those videos just for ease. Oh, actually, no, I think it takes you through to some articles. It takes you through there. And there's also a link to his book, which is this thing here I've got, which is a really handy summary of a lot of the strategies. Some of them are very complex and not necessarily suited to everybody, but a lot of them are, in broad terms, it's about making sure your estate has no perceived value in it, and all the value is held by trusts, whether it's an SMSF, which is a trust, or whether it's a family protection trust or some other form of trust, structuring it that way so that, number one, it's got greater protection so that the litigators can't find some random claimant, which they're very good at doing, who can come and attack this estate. And that means the people you actually want to have benefit from your passing actually end up having to pay the lawyers and this other random that comes along. But start with a booking in with Cass on our website, and she'll be able to guide you what might be worth doing next.
Yeah,
Right.
not only for estate planning, but Tricia, also some of the assets you've got outside super might be better inside super.
Yes.
And I can talk to you about that as well.
Absolutely. So that's what I want, because I do have a will, but it's sounding like a will specifically to the super is something to be thought about. I'm not really sure. Anyway, thank you very much. I'll book in with you, Cass.
No worries. We've got Jeanette next.
Yeah, hi everyone. I've got 2 questions, please. I'm 62 and I've retired. I got out my super, which was only about 25,000, and I also purchased gold and silver. Do I need to declare anything at tax time?
Sorry, I just had a blank out for a minute. 62, and it's all in an SMSF, those assets?
I don't have an SMS, no.
Oh, okay. So you've got gold and silver just in your own name?
Yes.
Okay. So you've just bought it. Have you sold anything?
No.
No. Okay. You don't need to declare anything for purchasing. So it's only when you sell, and if you've made a capital gain, then that's when you need to consider declaring some of it.
Okay.
Does that make sense?
To do anything about that? I don't need to declare that I took super out? No. Excellent. Thank you.
No. Because you're over. Did you take the super out when you're over 60?
Yes.
Yeah. So that's all tax free. So that's all fine.
Excellent. Thank you very much.
It's nice to have good news. Glenda, I think you're next. And Tricia, you've still got your hand up, but we can put that down, I think. Here we go. Glenda.
I just had a question. Sorry, I joined late, so hopefully it's not out of context. I've just been thinking about the gold and silver that I've got in my super fund, and with the ratio at about 100-1 with gold and silver at the moment, thinking in the future when that ratio changes that I might want to swap some of my silver for gold. Will that in my self-managed super fund incur capital gains when I do that?
How old are you, Glenda?
I am 46.
not old enough yet. Yes, that will incur, if you make a capital gain in the super fund, when you sell that, it will be taxed.
Okay, so I guess what I'm trying to think is, so then I might be better off. I'm quite top heavy. I'm quite heavy in silver in my super fund, so I'm actually thinking maybe I should buy a bit more gold, given that my plan is not to touch it until I'm over 60, even though gold may somewhat be not a higher price, but it's, I don't have that opportunity to flip it easily in my self-managed super fund. If I bought more silver and then tried to flip to gold, I might be better off just buying more gold and holding it. Is that?
Yeah, so we can't give advice on what to buy in terms of gold or silver, but like my personal preference is definitely to have a better ratio than you've got. So like personally, I've got like a 50-50 ratio.
Okay.
But I do understand that silver is undervalued at the moment, so a 70-30 ratio is nice to have as well. But yeah, so I'd probably increase, I would increase your gold holdings to hold.
Well, I was at a Gympie My Place seminar with Ainsley last month, and someone asked the question, is it too late to buy gold? And the Ainsley reps all looked at each other and went, it's never too late to buy gold.
No.
And they were specifically asking about, the gold silver ratio and so on. And they were talking about, well, at the moment, a lot of people are buying silver because it's undervalued. It's, as you said, 100 to 1. When it starts dropping down, say 50 to 1, that's when they're going to start swapping it out, because what they said is the end goal is always gold. Silver is just a means to get there. Obviously, it's got its own industrial uses and value otherwise, but at the moment, the big reason everyone, as Cass said, is looking at silver is, 100 to 1, 100 ounces of silver to buy 1 ounce of gold. When it drops below that, you get more gold for your bang for your buck. So
yeah. And personally, I think gold has got a long way to go. Like every time we see these little economic hiccups, like Trump's tariffs, gold just skyrockets. But I think we've still got a long way to go in the economic decline that is coming, and I believe that will continue just to see gold go up. Jim Rickards is coming to Australia. Mary Jane and I have bought tickets in.
Wow.
I think. But last time I listened to his podcasts, he was predicting gold would go up to 15,000 US.
Okay.
And long way to go. So gold is still a really good asset to be holding.
Yeah.
I hadn't seen he's coming to Australia, Cass. Where are the tickets for his talk on sale?
So it's 19th of August. We got a preview. I think they haven't gone publicly, although I'm just looking on the ABC Bullion website, which I'm not. Oh, hang on. It's actually not linked there. But ABC Bullion is actually hosting it. And the tickets, I'm not sure if they're publicly available yet. When they do become available, they'll be $50 a ticket, which is not that bad at all. It's at the Ivy Ballroom in Sydney. So just keep your eyes out there. I don't have a link or anything.
I've got a link. I'm just putting it in because I mean we got it not as private. We
got a preview. I'm pretty sure we did.
Yeah, but the tickets are available just on a link. So I've just put the link in there. $50 a ticket. Mary Jane, we actually got the more expensive tickets because you get some free silver with it. So we thought, why not?
Well, it's not free silver. You buy the silver and you get a ticket. They had 100 of those, so it wasn't the super expensive $1,000 one. It was the $350 one where you get $350 worth of silver and a ticket and a glass of champagne. So I thought I will get that one.
Perfect. Thank you. Appreciate that.
Oh, but the more important thing about that ticket is you get VIP seats. I thought I want to get VIP seats. Sorry, who's?
Yeah, we have all women on today.
Why is there reverb? Hang on.
That was when Anne came in. She's gone now, and it's gone. But anyway, we have all women today, which is interesting. Good. Okay, next.
Yeah, I was noticing that earlier. All women. We occasionally get one or two men, predominantly women, but that's what Grant Abbott was talking about as well. He was saying as soon as men stop working and retire, they give themselves about 2 to 5 years before they drop dead. And it's the women that Keep
look
going.
after everything. Yeah, absolutely. So any more questions?
Well, it's good we've got JB, you've got another question?
Yes, I'm just wondering, is there ever a point in time, let's say the price of gold goes up as expected at some point, is there ever a point in time where it might be considered to take some of those profits to reinvest in other assets? But I'm not exactly sure, based on discussions in the past, what other assets could be reasonable to consider.
Yeah, so like as I said earlier, Jim Rickards is predicting gold going up to 15,000 US. So for me, gold is a really long-term hold. Perhaps if it went up to 15,000 US, then I might consider selling some. But then, yeah, and then exactly, it's all what other assets. So for people that have been following us, or particularly myself for a long time, I've been saying to clients, the only investments I'm recommending is gold and silver, gold and silver, gold and silver, gold and silver. So if you sell your gold, what are you going to put it into? Silver. Yeah. So it really would be more a matter about your own circumstances. Let's say gold escalates and then in 5 years' time, whatever is happening in the world, and you decide you want to buy yourself a little rural acreage and you want to sell your gold to get that. Mm-hmm. So I would only sell my gold when there's something I want to buy. I wouldn't sell it just for what? Put a cash in the bank and that's very risky. I believe cash in the bank, so don't do that. Some people put it in crypto, which I believe is risky as well. Don't do that. Only sell it when you've got something that you want to put it into.
Yes, that sounds good. I just thought of another question too. I actually just remember an email did come through from FFS about the Macquarie bank account, how there's that other account that earns more interest. Now, at the time when I set up my super fund, I didn't think that was probably necessary because I pretty much only keep cash to cover the fees. So it wouldn't really be worth setting it up just for that amount of cash, would it? Do you think?
Mary Jane can take that one.
Yeah, look, you don't have to use it. It doesn't cost you any money. It's one of those questions that you might, I've just been through this with my own private health insurance, which I thought, I don't need that high coverage. I'm going to drop it down. And then the week after that, my son tells me he needs jaw surgeries. So anyway, so I've now just gone back and reinstated it all. So it's one of those things that you think, oh, well, I don't need it now. But look, it's not going to cost you anything. It can sit there and you don't need to use it. It costs us nothing to set it up for you, except a bit of time. We can do that for you. If you don't want to bother, that's fine. We didn't used to automatically set up both accounts for our clients at the beginning because, well, it was an internal decision. I revisited that decision just over a year ago and decided it was not breaking any investment advice rules around what we could and couldn't do. It was just a matter of process, and we now automatically open both accounts. Just as a courtesy to our clients, you use it, you don't use it, doesn't matter.
Okay, great. Thank you.
Michelle, I think you're next.
Hello, is that me?
Yes.
Yes.
Sorry, I haven't been to one of these before, or not for a long time anyway. I've been reading a lot about super changes, and I was wondering if Cass has commented or seen the Treasury document that Jim Chalmers posted late last year.
No, I probably saw it at the time, but I don't recall the detail of it.
Sorry, I'll just go to improving the retirement phase of superannuation, it's called.
Mm-hmm.
And they're talking about a lot of new products they're introducing, or they intend to introduce, better retirement products, best practice principles. And I've been reading between the lines and watching quite a few super YouTube videos. A lot of industry funds are already offering annuities and income streams. And that document that Chalmers has posted with the changes kind of suggests that people will be encouraged to give up 80% of their balance over 250,000 in their super as an annuity.
Yeah.
And I'm wondering, I'm extremely concerned that they'll be doing that to SMSFs as well somehow, because there's a lot of documents about Jim Chalmers, a lot of media articles in the AFR and investment magazine saying the $4 trillion of super that Australia has is going to save Australia. Have you seen a lot of articles like that, Kath?
Look, I've seen a lot of articles and a lot of rumours and other things kicking around, but I just try not to get too caught up in things that haven't happened yet, because so many of the politicians, particularly with super, we used to have a running joke that what do the politicians do on a Friday night for fun? Get together and change the super rules. Because they tend to like to just throw around all sorts of changes in the super rules. But as people have seen for the $3 million change that I think they have bringing that in now, but it's taken them a few years of working it through just to finally get that one change through. And even that one change, they really struggled to get it through. And that one change, it only really affects those with more than a $3 million balance, which I could probably tell you here is no one here on this call, certainly not myself or any of us, and I had a client once that there was a $6 million rule, it still is a $6 million rule on small business active assets. And he came running to me in a panic. Oh my God, I've exceeded the $6 million rule in business assets. And I just went, good on you. It's excellent. It means you're wealthy.
Mm.
And he's only going to pay a tiny little bit of tax on the amount above 6 million. I'm like, well, come on, mate. You're lucky to have 6 million.
I
anyway,
agree.
he still got me to try and hide everything so he could get below the 6 million. But yeah, so I don't get too caught up on things that they're just trying to predict for the future. And I do know that with most super rules and most tax rules, in fact, most government rules, when they bring them in, they normally can't do it retrospectively. So they might say, okay, money that's going into super from now on will be subject to these rules. So that would still exclude everything you've got in super now. And then the other thing is if they go and do that to industry funds and retail funds, well, then that's all the reason to be in an SMSF so that you don't get caught up in that.
But they could potentially somehow enforce it onto SMSFs as well.
They could potentially, but that's going to be a lot further down the track.
Yeah. With that 3 million tax, I've been reading pretty much every article that hits the media, and then a couple of the articles have said, but of course we think people think super should be more sustainable and equitable, which are very much the SDG, Sustainable Development Goal narrative. So it's almost implying that I've taking it as they're doing that to make us angry and to demand change. And that's why these changes, the old problem, reaction, solution.
Yeah.
And, people are saying, oh, this tax isn't good enough. And it affects children in the future. So, yeah, we need to look at super. And even there was a finance guy on Sky News that said superannuation needs a reset. So, all the language from the Sustainable Development Goals is hitting the media. So I feel like they're conditioning us for changes.
Yeah, and they have been doing that for quite a long time. And one of the good things that goes in our favour with super is that, who's got the most super out of everybody that I know? All the rich politicians.
Yes, yeah.
So when it comes to taxing the super balances, there's a lot of politicians that will be strongly resisting any changes. So that goes in our favour, and we just have to keep an eye on it for the future. But as I said, it's more about making the most of all the tax advantages in super now, and worrying about the future when the time does come.
Well, I'm turning 60 next year, so it's kind of close, but
that's
not quite
perfect.
there.
Well, that's perfect, because you can keep using all the benefits of super, keep all your money in super, keep piling it into super, because at the moment it's still the best tax advantage place to have your money. Then if they change the rules, you're over 60, so you can take it all out.
The only thing is, of course, if they announce changes to say that we're going to somehow, lock up your money over 250,000 because we want to save the economy, just something crazy like that, they're not going to announce it too soon because people will have a run on all the accounts. The people that are over 60 that have their money in super because it's tax free or tax beneficial.
I've been in the tax world for 30 plus years, 35. And I know the world is changing and we're going down slippery slopes. But I have never seen any tax change that they've announced overnight and locked people's accounts and done something like that radically overnight.
Yeah.
They normally all do it with announcements, and then it goes, well, it's still got to go through all the houses, the Senates and everything. So it's not going to happen overnight. There is always plenty of warning with things like this. Tax changes that they bring in are going to will affect people like in their 20s and 30s now that can't get their money out, and these changes are going to have long-term impacts. But for those of us that are nearing retirement anyway, we just take the money back out again.
Yeah, that's what I'm hoping. I'm just concerned that there's going to be, when we had the pandemic, it was a state of emergency, and that allows them to do whatever they want. And if we had something like that again, like there's talk of another assassination attempt on Trump when he goes to the Middle East, or what are the other? There's so many different scenarios of what.
Yeah, there's a lot of psyops going on, and we've all got to be aware, as we know, having been through the last 5 years doing all the human rights activities that we all did, that there are psyops on both sides. So we might think, oh, well, we're getting all this sort of separate information here in our special channels, but they're running those through. There's definitely a lot of paid agitators in there controlling other narratives. So the bottom line is and I was terrified that thinking that they were going to bring UN bloody tanks down the road and forcibly inject everybody back in the 2020 2021, and I had my runaway caravan all geared up ready to run off to God knows where, and that would have been my make or break. That didn't happen in Australia. We still, yes, that could happen, but if that happens, then we've got bigger problems than our superannuation balances, because they'll be gone. It'll be food and shelter, and not being forcibly injected. So look, I guess my point there is, don't worry too much, and certainly the more we can continue to put pressure on those politicians, even if they're puppet politicians, the politicians that are on our side, plus the ones that aren't, we keep saying, we're watching what you're doing. We're watching what you're doing. Don't do this. So all that information you've got, Michelle, is very valuable. Keep writing to your politicians, your local politicians, your senators and so on, and saying, well, this is not right. This is not right. And it might help draw attention to them. And then they might start thinking about their own, $1 million super balances and say, hey, we don't want to lose this as well. Yeah. So, yeah.
The one last thing to add to that before we get on to Glenda is that's always one of the benefits I've said about the self-managed super funds, is that particularly if you've got the money in gold and silver, and if you've got that gold and silver stored at your house in your own vault, which you can do, and then they bring in a radical, no, we're freezing all the bank accounts and no one can get their super. Well, you've already got your super. It's in your vault, in your backyard. So even though technically you wouldn't be able to do anything with it, but if the whole world is coming stuck real quick, you've got your super already in your hands.
Yeah, but you need to have a condition of release. Is that right? When you turn 60?
Yeah, but what I'm saying is the whole world is gone down the hole, and we've got UN agents in their trucks rolling down the streets. Who cares, Michelle? And I can't say that in the video, but I just have. But who cares? Because at that stage, it's like, are you going to care about the condition of release?
When the zombies come. When the zombies
are coming and you're worried about feeding your children or feeding your relatives, who cares about a condition of release? Worry about that when the world comes back to normal.
So are you saying we could be non-compliant if there's zombies?
I wouldn't dare say that. But you can certainly choose to do what you want to do when that time comes.
Yeah. Okay. Oh, well, no, it's good. I'm just trying to stay a step ahead, and I'm mainly keeping an eye on official websites. I'm trying to stay away from, social media, but you get little bits of information from some of those sites as well. But yeah, I'm looking at, like I said, that Chalmers document and trying to read between the lines of what it really means.
Yeah. All right, Glenda.
So just a follow-up question from what I said before. I've also got a small amount of Bitcoin in my self-managed super fund. I'm just trying to work out when capital gains comes into play for that. So if I bought it and then it's increased and then I choose to purchase gold and silver, does that trigger a capital gains?
Yeah.
It does. Okay, so if I'm putting it in there, I really would need to be holding it until I'm after 60 to have the tax-free benefits.
Yeah, it's a good question because not really. You should know. I remember going back to my very first degree when I was 20, and tax is tax, and you shouldn't plan your whole life just around tax. So if you have a good reason for selling the Bitcoin because it's made a great gain, and then you think put it in gold's better because it's going to make a great gain, don't let the tax consequences hold you back. There's no trick you held that Bitcoin to you 60 just so you didn't have to pay tax, and then you get there and Bitcoin's gone. So yeah, and the capital gains tax in an SMSF is probably the best tax you can want to pay anyway. It only works out at about 10% of the gain.
Okay.
So you're better off making that gain and keeping 90% of it, reinvesting it and paying a small tax bill on it.
So it's 10% of the gain regardless of the period that you've held it for?
Over 12 months.
12 months. It is 12 months again. Okay, so 10% over. Okay, gotcha. Okay. Thank you. That answers my question. Appreciate it.
No worries. Yes. So anyone else? We're getting close to time, but we've got time for a few more.
Sorry, what was the percentage capital gains if it's under 12 months?
So if it's under 12 months, you just don't get this 50% discount. So I'd have to, I believe it's 33%.
I thought
In
it was
super?
in 15 in super before 12 months and 10 after 12 months.
Yeah, okay. Yeah, 15%. So it's not that much more anyway. Like if you really wanted to sell, you would just sell. Having said that, if you wanted to sell and you've had it for 11 months, well then, yeah, wait an extra month to get a little bit more of a benefit.
Yeah, I think the 50% discount was for personal, wasn't it? Yeah, Mary's saying, yeah.
It's still the same in the SMSF. You've got to hold it for 20 months to get that 50% discount to bring it down to the 10% tax. Anyone else? Oh, Tricia?
Purely technical issue. I'm trying on my phone to book an appointment with you, Cass, and I'm not having any luck at all. Long consult with Cass.
So did you want the free initial
that would be great.
wills one, the wills estate planning and asset?
That would be great.
Okay, so if you click on that, select staff, drop down menu, and I'm just going to share this because this is a very common thing that even I have things with. You have to click the one you want. You've got the date, say the 20th, that's just as an example, the 20th, CAS. You have to click on CAS. You have to actually click on the time, then fill in your details. A common thing is people don't necessarily click on one of those things.
Okay. I'll have to do it on my computer because the phone's not showing that many options for me.
Oh, okay.
So I've only got long consult with Cass and then her name's coming up. Yeah. Anyway, I'll do it on the computer when we finish. Thank you.
Okay, no worries.
Thanks so much.
And Tricia, if when you do, okay, so I'm curious now about why your phone's not showing up that. So are you able to maybe refresh so at the top, does it say meet and greet all services? If you scroll right to the top?
No.
That's very odd. Okay. Maybe I don't know why that would be. If you scroll all the way through and you can't find something called wills and estate planning.
No.
Okay, I do not know. Okay, we'll go onto your website, onto your computer later. It should be there because I can see it.
Okay. There's only 8 options on the phone.
Right. Well, there's 2, 4, 6, 8, 10, 12 options on the computer.
Okay, I'll do it.
So maybe there's some sort of cached thing, or you're somehow looking at it, something that's not. Yeah, I don't have an answer for you on that. Sorry.
Thank you.
But do let me know if you are experiencing the same problem on your computer. Just email me if you don't mind.
Mary Jane, what is your email, please?
mary-jane@freedomffs.com.au.
Mary-Jane at Freedom FFS.
Yeah.
Freedom
Jane at freedomffs.com.au. And I've just put it in the chat as well.
Lovely, thank you.
Yes, and I just had a Mary Ann emailed me her issue earlier about the tax on unrealised capital gains. And no, Mary Ann, you have not been taxed on any unrealised gains. Our office has just sent you a property profile report, which gives the valuation of your property, which is just what they have to do. But there's no tax on that unrealised gain.
Oh, thank you. I'm so glad I found out while we're still here. So thank you.
No worries at all. So Tricia, I think we've already spoke to you. So anyone else in the last 4 minutes that we've got?
All right. Well, very nice to see everybody here. I will endeavour to put this up on our YouTube as quickly as I can. Keep your eyes out for lots of good events coming up. I'll just give you a little highlight. We do have, let me just, my computer's so slow. Here we go. So on Friday the 30th, which is Friday the 30th of May at 7 p.m. in the evening, kick back with a cup of tea, and there'll be a really simple interview with Mike Sims, who's from Millions March. He's a great human rights advocate, and he's going to be interviewing Grant Abbott, who is the SMSF and estate planning strategist, one of Australia's leading strategists. His presentations, for those who have seen them, have been quite mind-freezing, blowing. They're very detailed. He is an expert in his field, like Cass is. Cass's beauty is that she can really simplify things for us to understand. And so Mike will be interviewing Grant to get that sort of information across. Particularly, for example, Mike's community has lots of disabled and disadvantaged children in it whose parents are going to be getting older, thinking about if they pass away, what happens to their kids' future, to make sure that all of their financial concerns are looked after. So that'll be a very interesting interview. Then June 13, I'll be up in Jimboomba in Queensland. If anybody is out and about that way, can pop by. Ainsley and I will be there. All right. Thanks very much.
All right, thank you, everyone. Nice to see you all. See you again.
See you. Bye.
Bye.